Welcome back to the channel, guys. So this is a little bit overdue, the ETF Battle Royale, where I look at IncomeShares versus some of the underlyings and other potential peers in the market like YieldMax. It's taken me a little while to pull all the data together and present it to you as I try and focus on accuracy with the data as much as possible. So this is going to be the total return performance between October the 1st, 2025 and November the 19th. Today is 20th of November 2025, so it's fairly up to date at time of recording. Note the gold and silver data ends on the 31st of October 2025. So we can see from an equities perspective, IncomeShares has come out on top on 7, YieldMax 4, and the underlying 5. Commodities, which is just the gold and silver income, has outperformed curve in this particular instance, is the one I'm comparing against. I know YieldMax has the gold miners, but I thought it was better to compare against a similar ETF that's not looking at miners, but is actually looking at the actual commodities directly. So if we look at the top asset winners, we can see for this period, AMD has come out on top around 40%, Alphabet at 16%, and Broadcom around 7 to 8%. MicroStrategy in terms of losers is the leader. It's at negative 40%. Coinbase negative 24% and Meta negative 16%. So we have seen a pullback in crypto, and that's impacted MicroStrategy and Coinbase. And generally at the time of recording, markets are generally down as well. So if we start to look at the detail now, if we start off with AMD, as I said, the underlying asset is winning at 40.41%. YieldMax at 28.56% and IncomeShares 22.13%. So underlying asset doing the best, YieldMax then comes in second, and IncomeShares is last in the case of AMD. Okay, if we now look at Alphabet next, we can see that the underlying asset is at 16.08%, YieldMax at 14.91%, and IncomeShares at 14.86%. So fairly tight grouping there in terms of the numbers there. The underlying asset edging out on top, and YieldMax and IncomeShares arguably negligible differences there, but YieldMax has performed slightly better. Broadcom, there is no YieldMax equivalent, so underlying asset has done 2.13%, and the IncomeShares has done 7.55%. So good outperformance there against the underlying. And remember, these numbers are total returns. Okay, so if we look at Apple next, we can see the underlying asset is 4.8% winning out, YieldMax 4.15%, IncomeShares 4.1%. Fairly close numbers across the board, so no real gaps. Amazon next. Now this one is interesting. So underlying asset 0.87%, YieldMax negative 0.04%, and IncomeShares 4.43%. So this is quite a substantial outperformance in a way. So we can see how if a stock has plenty of sideways, downward, occasional and upward swings, that these IncomeShares funds can do quite well. I suspect this outperformance is probably caused by that sleeve that they have, that 25% sleeve that's uncapped, and then they're able to get the options income on top. So when there was a drop in the underlying asset, they were able to outperform through the income. When there was a swing upwards, they were able to capture the full upside. So it seems to have worked quite well in the case of Amazon there. If we now look at silver, as I said, I've picked, note this is from the 1st to the 31st as a reminder. IncomeShares has done really well here. It's done 3.74%. with curve at 1.67%. So it's generally done better than the curve fund. And I picked the curve fund, as I said, because they do a fairly similar strategy in terms of they use the actual silver commodity versus a basket of miners. Okay, if we look at a Mag 7 basket now, we can see IncomeShares is at 3.71% out top. What's interesting is YieldMax and Roundhill's versions are actually in the negative territory. That was quite interesting to see. So IncomeShares has fared out better. And I think this is probably down to that sleeve strategy within each of the funds. Okay, if we look at gold next, here a fairly tight grouping. IncomeShares 2.59%, Curve 2.33%, underlying asset 3.53%. So underlying asset wins, but you'd argue it's fairly marginal. So what we're seeing, or what trend we're starting to see, is where we've got low volatility on a stock or low volatility within a period for a particular stock, we're typically seeing how the numbers can be fairly close. But where we have things where there's greater momentum behind it, basically volatility in effect, we can see that certain stocks and certain strategies are working out better than others. If we look at NVIDIA now, and as I said, this at time of recording, this is not capturing the move that happened today, which I think was fairly large, but IncomeShares down 1.95%, YieldMax down 0.04%, underlying asset 3.14%. So YieldMax wins out here with the least decline from a total returns perspective. But it's good to see that IncomeShares was able to outperform the underlying asset and not go down as much. Tesla now, Tesla had a fairly poor period, and we can see how the underlying asset is 12.6%. YieldMax -6%. It's held up well because of the income aspect, even though it's negative. And IncomeShares 1.61%. So a good outperformance there from IncomeShares despite everything, all three being negative. So I don't know whether that sleeve is helping them out with that, knowing the volatility of Tesla generally. Microsoft next, underlying asset is almost down 5%, YieldMax down 4%, so fairly similar between YieldMax and underlying asset, and IncomeShares 1.6%. So it's held up pretty well in terms of the drop that it's experienced. Palantir, another negative one, underlying asset down 9.5%. YieldMax has done pretty well here, 6.82%, and then IncomeShares is 9.97%, so a little bit worse than the underlying there as well. Alibaba, so the underlying assets down 12.62%, YieldMax is down 10%, and IncomeShares has fared ever so slightly better at 9.67%, but it's fairly close. But both IncomeShares and YieldMax are outperforming the underlying asset over this period of time. Next one is Meta. So Meta is down 16.68%. YieldMax is down 14.75%. But IncomeShares has done really well. It's only down 10% or 10.5%. So it's done considerably better than the underlying and YieldMax. So that's good to see. Okay, let's look at Coinbase now. Underlying assets down 24%. YieldMax fairly close at 23%, and IncomeShares 22.5%. So all three are down. IncomeShares has fared the best, then YieldMax, and then the underlying asset. But these are all very close numbers, not huge gaps between the percentages here. If we look at MicroStrategy next, underlying asset is down quite heavily, 38.89%. YieldMax is down 40%, so worse than the underlying, but not massively. IncomeShares has fared pretty well at 35%, which is doing slightly better than the underlying and 5% better than YieldMax. Unfortunate for anyone who holds MicroStrategy or Coinbase right now due to the crypto markets, but because of the volatility there's a lot of premiums, and we know that it can recover as quickly as it goes down. So I think that uncapped sleeve with IncomeShares is hopefully going to come in handy when that does occur. As a summary here, the IncomeShares strategies showed strong resilience, protecting capital better than the YieldMax funds in 7 out of the 11 equity comparisons where both funds were available, particularly in downturns. But YieldMax has outperformed in strong bulls like the AMD, capturing more upside. So there you go, guys. Let me know in the comments what your thoughts are. Thanks to the 100% Club for getting to the end of this video, and sorry for the delay of getting this one out there. From my personal perspective, I was actually quite surprised by these numbers. I, for some reason, expected IncomeShares not to fare as well as they did. But I think when you're in a bear market, it's always difficult to see because everything's down and you just assume that these are performing badly. But the reality is the underlyings are all performing badly in most instances, and that's causing both YieldMax and IncomeShares to perform badly. But what surprised me was some of the great performances, despite being down, they were not down much compared to their equivalents in YieldMax or underlying asset, which surprised me. But it wasn't consistent, right? It wasn't across every fund. So clearly, depending on the movements that are occurring within that period, how many sideways movements there are, how many upswings they are and how sharp they are, and how many downturns there are in that period. So the volatility is having an impact here on the performance. So it's quite interesting to see. But there you go, guys. Hopefully this video was useful. Treat none of this as financial advice. Do your own due diligence as always, and I will catch you on the next one.